Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Tuesday, May 31st, 2016, and this is the Daily Report for Gold and Silver. Although markets were closed on Monday, yesterday, Memorial Day, we saw quite a bit of action on Sunday as the markets traded overseas and traded under sufficient and superlative pressure, taking gold prices on an intraday basis below $1,200 to $1,199. That is our low. We had a brief and steep recovery today as we saw the precious yellow metal trade back up and higher to close up really $10 on the day when we compare it to the close on Sunday. Of course, Friday, we did close at about $12.10. Market is trading $12.14, so we're up about $4 from Friday's closing price. High on the day, $12.17. Current print, $12.14.30. Although traders in the United States did have the day off yesterday on Monday, there was no lack of market turmoil and market movement Sunday overseas as we witnessed gold trade under dramatic pressure, trading off about $10 at one point to trade to an intraday low, which took it below $1,200 to $1,199. That is this candle right here. And as you can see, the market actually closed below $1,207. That was the mark that we were looking for. If you recall from the weekend review, we talked about the fact that with this market under pressure in the way that it is, and the fact that it had broken through a couple of critical levels, this being at 1232, that was a minor level, but we had a major 23% retracement at approximately 1245, and the market really steamrolled right through those price points. Our question was whether or not, on a technical basis, we would see the area of about 1200, 1208 in that area be an area in which prices would find some potential support. Now, for the interim, at least for the short term, there's absolutely no doubt it has found some short-term support, really bouncing off of those lows at $11.99, and as I said, currently trading about $15 higher from that point as we see it currently at about $12.14. Now, we talked about the fact on Friday that what we needed to see was a couple of things to formulate a setup that would actually trigger a buy signal in gold, and we've certainly met some of that criteria, so I do want to spend a couple of moments and kind of go through that. The first criteria is, as this market comes down, we wanted to see if it would find any kind of technical support at around 1208. The fact is that it did trade below that, not by very much, trading to that intraday low of right around 1200. So that seems to be where we found some genuine front wind that was supportive of the market and allowed traders to either bargain hunt, short cover, or initiate new positions to bring it back up. The fact that it closed well above the low of the prior day candle allows us to identify a pattern simply called an engulfing bullish. Now, for an engulfish bullish to be taken, it has to meet certain criteria. And the most important component of the criteria that we're looking at is going to be witnessing gold trade with a confirming candle on the following trading session, meaning overnight tonight as well as tomorrow. Simply put, I do not want to jump the gun here until, or if, I should say, we see a confirming candle. A confirming candle for an engulfing bullish is going to be a green candle, means that the market closed higher than it opened with a higher high and a higher low than the previous green candle, and that would be this green candle here. Assuming that we meet this criteria, we have seen some technical support in this area. That's the first thing that we wanted to look at. And then, if you recall from Friday's show, I talked about the need to identify a key reversal pattern, a pivot point, so to speak, that would indicate that we had an imminent change in direction. Now, one of the stronger patterns and more common patterns is that of an engulfing bullish. So in its simplest form, in terms of an engulfing bullish, typically what you want to see is a market is in a defined downtrend. During that downtrend, it is capped by a long red candle, meaning that final move down. However, the following trading day, what you get is the market either opens at the close of the prior candle or below the close of the prior candle and closes at or above the open of the prior red candle. And it is these 2 days that would make up that particular pattern, the pattern of engulfing bullish. So what you are looking for is that key pivot point. In other words, market in a defined downtrend, the identification of an engulfing bullish, confirming candle the following day, and then that would really indicate that pivot up. That pivot up, of course, will trigger a buy signal for us, and that would, of course, be a buy signal in gold. Now, as far as silver goes, we did have silver actually trading lower for the better part of the day. It appears as though it's going to close in essence unchanged, just below $16 though at $15.98. We are looking at current resistance just above the current price. It's trading at $15.98, and we have identified resistance at about $16 to $16.06 per ounce. I do not believe we are seeing the same kind of strength right now in silver than we are in gold. So all things being equal, when we go in and initiate a buy signal in gold, I should say, if the criteria we just spoke about is met, unless I see a really dramatic turnaround in silver, we will probably sit silver out and simply take gold long. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.